Financial markets. They sound complicated, right? Like something only Wall Street wizards need to understand. But the truth is, financial markets are the heartbeat of our economy. They are the bustling marketplaces where buyers and sellers come together to trade everything from stocks and bonds to currencies and commodities. Think of it like a giant flea market, but instead of vintage clothes and antique furniture, people are buying and selling pieces of companies, loans, and even bets on the future price of gold. Intrigued? You should be. Understanding how these markets work is crucial for anyone who wants to take control of their financial future. Whether you're saving for retirement, buying a home, or just trying to make sense of the news, financial markets play a role in all our lives. So let's demystify this world together, shall we? Let's take a journey through the exciting, sometimes intimidating world of finance, and empower ourselves with knowledge. Ready? Let's dive in. Now, let's break down these markets. Financial markets can seem like a labyrinth of numbers, charts, and jargon, but they are essential to the functioning of our global economy. They provide a platform for buyers and sellers to trade financial instruments, which helps in the efficient allocation of resources. Understanding these markets can empower you to make informed financial decisions. It might seem overwhelming at first, especially with the sheer volume of information and the rapid pace at which things change. But don't worry, it's not as complicated as it looks. With a bit of knowledge and guidance, anyone can navigate these markets. Think of it like a trip to a giant shopping mall. Each floor specializes in a different type of product, and each market has its own unique characteristics and functions. Just as you wouldn't buy groceries from a clothing store, you wouldn't trade stocks in the bond market. First, we have the stock market. This is where companies go to raise money by selling shares or pieces of their business. It's a high-energy floor, full of excitement and volatility. Investors buy and sell shares, hoping to profit from the company's growth and success. The stock market is often seen as a barometer of the economy, reflecting the confidence of investors in the future. Next, we have the bond market. Here, governments and companies issue bonds to borrow money from investors, promising to pay back the loan with interest. It's generally considered a calmer floor, offering more stability. Bonds are often used by investors looking for a steady income stream and lower risk compared to stocks. They play a crucial role in funding public projects and corporate expansions. Then there's the Forex market, the largest financial market in the world. Here, currencies are traded 24/7. It's the international floor, buzzing with activity from all corners of the globe. The Forex market is essential for international trade and investment, allowing businesses to convert one currency to another. It's also a playground for speculators who try to profit from fluctuations in exchange rates. Don't forget the derivatives market. This floor is for the risk takers, where investors trade contracts based on the future value of assets like stocks, bonds, or commodities. Derivatives can be complex and are often used for hedging risks or for speculative purposes. They include options, futures, and swaps, and their value is derived from the underlying asset. Speaking of commodities, there's a market for that too. Here, raw materials like oil, gold, and coffee are bought and sold. This floor can be quite volatile as prices swing with supply and demand. Commodities are essential for the production of goods and services, and their prices can be influenced by geopolitical events, weather conditions, and changes in consumer demand. Of course, we can't forget real estate. This market deals with buying and selling land, buildings, and homes. It's a more familiar floor for most, but it can be just as complex. Real estate investments can provide rental income and potential appreciation in value, but they also come with risks, such as market fluctuations and property management challenges. Finally, we have the newest floor in the mall, the cryptocurrency market. This is where digital currencies like Bitcoin and Ethereum are traded. It's the most volatile floor of all, full of risk and potential reward. Cryptocurrencies operate on decentralized networks using blockchain technology, and they have the potential to revolutionize the financial industry. However, they are also subject to regulatory scrutiny and market speculation. These are just a few of the many financial markets out there. Each one plays a crucial role in our global economy, connecting borrowers and lenders, investors and businesses, creating a complex and fascinating web of financial activity. By understanding these markets, you can better appreciate the interconnectedness of our world and make more informed financial decisions. Whether you're an investor, a business owner, or just someone curious about how the economy works, there's always something new to learn in the world of finance. So we've explored the different types of financial markets, but how do they actually work? What mechanisms are in place that make these markets so integral to our daily lives and the broader economy? What makes them so vital to our economy? To understand this, we need to delve into the core functions of financial markets and how they impact various aspects of economic activity. Think of financial markets as the engine that drives economic growth. Just like an engine powers a car, financial markets power the economy by providing the necessary fuel for businesses and individuals to thrive. They do this in several key ways. Each function they perform is like a cog in a well-oiled machine, ensuring that the economy runs smoothly and efficiently. Firstly, they provide a platform for businesses to raise capital. This is crucial for companies looking to expand their operations, enter new markets, or invest in research and development. Need to build a new factory, develop a groundbreaking technology? Financial markets make it possible by allowing companies to issue stocks or bonds to raise the necessary funds. Companies can issue stocks or bonds in the financial markets to raise the necessary funds. This process not only helps the businesses, but also provides investment opportunities for individuals and institutions. This injection of capital allows businesses to grow, innovate, and create jobs. When businesses expand, they hire more employees, which in turn reduces unemployment and boosts consumer spending. Secondly, financial markets facilitate the flow of savings and investments. They act as intermediaries, channeling funds from savers to borrowers, ensuring that money is put to productive use. When you deposit money in a bank, they don't just keep it safe, they invest it in financial markets, providing loans to businesses and individuals. This process helps in the efficient allocation of resources. This cycle of saving and investing is essential for economic growth. It ensures that funds are available for new ventures and innovations, driving progress and development. Finally, financial markets promote price discovery. This is the process through which the prices of assets are determined based on supply and demand dynamics. The constant buying and selling of assets allows for the determination of fair market values. This is crucial for investors, as it helps them make informed decisions about where to allocate their resources. This transparency is crucial for investors to make informed decisions and for markets to function efficiently. Without accurate price information, it would be challenging to assess the true value of investments. Without these functions, our economy would grind to a halt. Businesses would find it difficult to secure funding, leading to stagnation and decline. Businesses would struggle to grow, innovation would stagnate, and our overall standard of living would suffer. The ripple effects would be felt across all sectors of the economy. That's why understanding the role of financial markets is so important for everyone, not just Wall Street bankers. A well-functioning financial market benefits us all, from the individual saver to the largest corporation. Now let's talk about risk. Risk is an inherent part of investing, and understanding it is crucial for any investor. Every investment involves some level of risk, and financial markets are no exception. Whether you're investing in stocks, bonds, or real estate, there's always a chance that things might not go as planned. But here's the key. Higher risk often comes with the potential for higher rewards. This is a fundamental principle in the world of finance. Think of it like a seesaw. On one end you have risk and on the other you have reward. The balance between these two is what every investor seeks to manage. On one side you have the potential for profit, the excitement of seeing your investments grow. This is the reward that drives many to invest in the first place. On the other side there's the possibility of loss, the risk that your investments could decrease in value. This is the part that makes investing a challenging endeavor. That's where diversification comes in. Diversification is a strategy that can help manage risk by spreading investments across various financial instruments, industries, and other categories. Don't put all your eggs in one basket. This age-old advice is particularly relevant in investing. By diversifying, you reduce the impact of a poor performance of any single investment on your overall portfolio. By spreading your investments across different asset classes like stocks, you can take advantage of the growth potential of various sectors. Bonds, which are generally considered safer than stocks, and real estate, which can provide both income and appreciation. You can mitigate risk and potentially enhance returns. A well-diversified portfolio can help smooth out the volatility of the markets. Another crucial aspect of financial markets is price discovery. This is the process through which the prices of assets are determined. Prices are constantly fluctuating based on supply and demand, economic conditions, and even investor sentiment. These factors interact in complex ways to influence the market. Think of it like an auction. In an auction, buyers and sellers come together to negotiate prices, and the highest bid wins. Similarly, in financial markets, prices are set by the interactions of buyers and sellers. Buyers and sellers are constantly placing bids and offers, trying to get the best possible price. This continuous negotiation helps to establish the market value of assets. This dynamic process helps to determine the true value of assets, ensuring that markets operate efficiently. Efficient markets are crucial for the proper functioning of the economy. Of course, no one can predict the future movements of the markets with 100% certainty. Market predictions are always subject to a degree of uncertainty, but by understanding the forces that drive prices, investors can make more informed decisions and potentially minimize their risk. Knowledge and strategy are key to navigating the complexities of financial markets.